All right, good afternoon, everyone. I want to, well, today is, today is Friday, March 16th, 2012. I'm going to go over all the trades that we took today in the live trading room. We were doing stuff this morning based on what we had done in the partners meeting last night. Now, as I go over it, you have to keep in mind that I missed a bunch of trades, and had I taken a bunch of trades, I would have been like some of the partners and done and out with 40 ticks per contract pretty early on. Before we get into it all, though, I want to say if you have not taken the free trial yet, you should go to www.cfrn.net/apply. That's APPLY. You can take the free trial there. With the free trial, you get all of our indicators. You get access to all of our indicators, all of our weekly trading zones, our live trading room for a week. Now, all the indicators comes with the charts that you see in front of you. You get all that from Daniel's Trading, and you get all the data feeds. When I say all the data feeds, I mean all the data feeds. You get them all. Well, except equities, but I'll give you an example. You get the indices and financials, the energy, the metals. With the energy, there's a whole bunch of things. I only have a couple of them listed here, but you can have a whole bunch of things. The metals, the grains. The metals is like gold and silver and all that. I don't think I have any listed in there. No, I don't. Grains, corn, soybeans, all those sorts of things. The currencies, you have the 6E, 6B, 6J, the FTSE, all those sort of things. Softs, like coffee, cotton, meats. Well, you can have cattle and all those kinds of things. I just don't have them all listed, but you can certainly add as many as you want in there. You get all that stuff for free, anyway. And let's see, in addition to that, that's it. We had the partners meeting last night. We had some good stuff in the partners meeting. From the partners meeting this morning, I'll briefly go over some of the stuff that we covered. The partners meeting was last night, but we traded stuff based on that this morning. Okay. Let me go over the trades that I took in here that were just the normal trades that we take in here. Okay. On the YM, I took a short right here after we had a bearish cross down below the BBC. I took a short right here, and I believe I have 12 ticks profit from that trade. Okay, it went on beyond where I took my profit, but once it closed the window of opportunity here, I just moved my stop up and took some quick profit on it. All right, there was another one right here after we got a bullish cross. It pulled back down right here to move up. There was another one going on right here a few minutes ago. We had a bearish cross and it pulled back up here to the BBC. Went down, closed the window of opportunity. The window of opportunity, guys, is the area between the BBC and the MA1. Okay. It went back down there. The MA1's held it so far and pushed it back up. All right, the ES, we didn't take any trades on the ES this morning. The ES has been in a 5-point range all morning. Actually, if you take away the first 10 minutes, if you take out the first 10 minutes, it's been in more like a 3-point range, 3.5-point range. So the ES hasn't been terribly tradable. There was one setup this morning on the 10,000 contract. And I'll show you that in just a moment here. Okay, right here. We had a bearish cross and the first pullback up to the BBC. After the bearish cross, you expect a 2-point bounce down from that. All right, the cycle was in favor of the trade, and it did push it down. Over here, we had a bullish cross. It pulled back right here, but it didn't actually hit it. The cycle wasn't above the 50, which on the 2100, we like to see that. This was going right up into support. Resistance dots right here. We didn't take this trade. By the time it actually did pull all the way back down to the BBC, it was right here, and it was going right into the resistance dots. We did not take that trade. All right. That's all we had on the ES this morning. I want to show you my 6E chart if I can find it. Here it is. This is the 6EM. But what I really want to show you is the 6EH2. Because that's what I was talking about this morning. Here it is right here. On the 6E, when we broke up above the elbow right here, the white was to the left of the green when we broke up above the elbow. That suggests that the bounce off the BBC, the first bounce off the BBC, is going to hold, and it did. You can see it held nicely right here. there's a weekly trading zone right here where it started to go sideways. Okay, it bounced from here right up to there, about 50 ticks, which was a nice 6E trade. All right, let me bring that back for just a second. You see, this is a 6EH contract. All of these other things that you see in here, the ES, the YM, the Russell, the NASDAQ, all those contracts are expiring today. The 6E expires on Monday. So that was the difference there. Okay. Let's see. Now we need to go. We did the YM, the ES, the 6E, the NASDAQ. I'll cover the NASDAQ a little bit right here. Let's scroll way back here. Okay, the NASDAQ had some decent trade opportunities this morning. Right here we had the double divergence. Price pulled up to the BBC. I did actually take this short, but I got out at break even on it because I realized I hadn't had a stop on the trade. So when I just got out as soon as I realized I didn't have a stop on the trade. It did move down pretty well. Okay. Now price reversed over here. We moved up a little bit, moved back down, and right in here where we had double divergence again. When I say double divergence, I mean divergence on this combo and this combo. All right, they're both the same combos, just with different settings. Price moved up pretty strongly off of that. Okay, we had the divergence again here on the pullback to the BBC. Price moved up a couple of ticks off of that, or a couple of points, I think, off of that. It started rolling over in here. We had bearish divergence right here. I actually took this short right here. I have it with orange arrows, but I actually took this short, and I stopped out on it a couple ticks higher right over here. Then it reversed, and it gave us double divergence on the long side right here for a long opportunity. Now that long opportunity would have been from right down here. We'll just say 2708. Okay, would have been the long opportunity right there. Larry, I'm not sure if you're in here. Just want to check that. Yeah, he is. Larry, this is where you filled. I think actually you filled over here somewhere, and you held all during this drawdown. Our 2708 entry would have been right in here, okay, for the move up. And let's see, I'm looking for another double divergence condition. It was almost in there, right in that spot. Right over here there was one, so you would have been looking to short right in here. Okay, and right over here on the long side, looking to go long right in here. Right here. Alright, the up close of that bar after it bounced off the BBC. Alright, that was the NQ. Now, the Russell. There's a lot to say about the Russell this morning. I'm going to bring it over here, and I will show you this. Alright, yeah, I went too far back. Okay, there were a lot of trades in here this morning. Now, when I opened the room up this morning right in here, I identified these trades that had set up. This would have been a long trade right here. This would have been another long trade right here. Looking for 10 ticks each on those trades. They both worked. There would have been another one right here for another 10 ticks. That's 30 ticks before the market opened. There would have been a short right in here for another 10 ticks. Possibly 40 ticks before the market opened. All right, and that was between, well, what time was that? My time. That was 4 o'clock. But if you just take the ones from, say, 7:30 on, then right over here, 7:30 on, there's probably 20 points possible before the market opened. All right. Once the market did open, I took this long trade right here. I lost 5 ticks on it. I took the short trade right here. I ended up getting stopped out at break even, or maybe plus 1 tick. I think it was plus 1 tick. But this one did continue on down for 10 points. All right. The idea here is to grab 10 ticks, not 10 points, 10 ticks out of each trade if possible, risking no more than 8. Okay. Here was another one right here that went for 10 on the short side, another one here that went for 10 on the long side, another one here that went for 10 on the short side, another one for 10 on the short side right here, another one for 10 on the long side. Right here we had a stop out. Right here we had a stop out. Right here I didn't take this trade, it moved down. Right here there was a stop out, and right here as we closed up the morning session, right here we got to break even on this trade. All right, I shorted here at 20, what was it, 25.8, I think, is where I got in there. 25.8. Now that was one of the setups that we went over in the partners meeting last night. Okay, for those of you guys who are partners, we should have those links out there for the last 2 partners meetings in the members area for you guys to go through all this, and really we take it all apart in the partners meeting. You know, on this trade setup alone, you know, it's really got maybe three steps really that you're looking at here. We really take it all apart. The indicators themselves, how to set these indicators up, and what to look for with the trades. Okay, and then this morning we tried to trade it as well as we could, but I missed a bunch of good ones, and I got a couple of losing trades here. I ended up the morning on the Russell. I ended up the morning down, but you know, the day's not over. It's, you know, I'm down a couple of ticks on it. Now let me bring this one over here, because this was the other thing that we talked about last night, and I just went over this a lot with the YM, with the NQ. Actually, I don't think I went over it with the YM, but I'll show you that with the YM in just a minute. Let's see, with this one right here, what we're looking for is the double divergence, okay, and then the bounce off the BBC. So you can see that happened right here. We had double divergence on the long side. It didn't really happen until over here, and so the bounce off the BBC would have been, price was below the BBC at the time. There wasn't much going on right there with that one, so you had to kind of not do anything right in there. Once the market actually started moving, right here we had some bearish divergence on both of these, okay, and it pulled back up to the BBC right here for the move down. Now, I believe with the Mike R trade, you know, the other one that we were showing there just a second ago, we were able to capture something on the long side there and on the short side. Okay, I'm pretty sure right there. Yeah, the long side would have been moving up right here, and the short side would have been right in here. Okay, we were looking at it from a little bit higher on the short side with this setup, but either way, it all worked out. Okay. Now over here we have double divergence again. So you're just looking for the up close here because you're already below the BBC. You know, once you're below the BBC, it tends to not push as far, it seems like, because it's got more work to get through the BBC. So there was that opportunity right there that just went a little bit. Over here we had the double divergence. This was running opposite to one of the other trades, but it ended up, this one right here, if you would have taken this trade right here, obviously it worked out really well. Then we got into a really choppy period over here. Now the best place to enter this trade would have been down here at the BBC. I actually took it way up here because I was short and I reversed, and I ended up holding on to that one for a long time. But the best place to enter this would have been when you had the double divergence and it had come down and tested the BBC down here. Okay, from there you could have gotten in at the close of that bar, the up close, and taken some profit right there. Over here we had bearish divergence. Again, double bearish divergence right here. The best place to enter that would have been to wait for the close up here with the BBC, and the down close right there to take some profit on the downside. I had shorted it over here at 25.8. I shorted it over here, and I held on to it for a while, but this was at the close of the morning session. All right, so I took a break even on that trade over here. All right, those were all the Russell trades. So I think I've covered the Russell, the YM, the ES, the NQ, and the 6E. Now, let me go back to the YM for just a minute, looking at the same setup on the YM with the double divergence, okay? Let me just minimize it a little bit here. You can see this was the open. This is our whole market right here this morning. Okay, this was our open. Right here at the open we had the double divergence. You were expecting it to go down right here. You know, you're not expecting the BBC to hold the price right here as it approaches the BBC. You're not expecting it to hold the price right there. And that was right here. Sorry, it did it again right over here. Now right here you are expecting the BBC to hold the price because you're coming at it from the bottom. So you're expecting the BBC to hold the price because you have this double divergence right here. Same thing right here. I don't know if you guys are seeing all of this, but right there, right there, and right over here. You were not expecting it to hold it, okay? Until you came at it from the bottom. Now, price moves along, and right over here we had the divergence again with the double divergence, okay? The DD right there, all right? And the BBC would have been anticipating the BBC holding the price right here, and it did. And it moved up off it. Over here, on the downside, you would have been anticipating it holding the price. And it held it for the most part. It didn't give much, though. 13,187 down to 13,183, only 4 ticks. So from 187, it's 5 ticks in the red right now. So that one's still in play, I would think. You can see we have resistance dots right up above us here. We could drop down from there, but the way that the resistance and support dots are congested right here is well, pretty much suggesting that the market's just going to go sideways and chop for a little while. You can see right here after we broke these support dots, and then we broke resistance dots after it reset. It had to reset again right here, and so now it's trying to establish a support and resistance, or a dynamic support and resistance range right now. All right. Now, just to clarify, when I say double divergence, I mean there's divergence between those lines and those lines at the same time. Okay, divergence between these lines and these lines. It's not divergence between anything down here in price. It's divergence within the indicator itself. Okay, divergence between those lines. All right. So hopefully that's pretty clear for everyone to see when that happens. We've been building on this for the last couple of weeks and just trying to bring it all together. Okay. Now we can scroll back and show it to you again and again and again and again. Without even looking at price, I'm just looking at the positions here. And this doesn't have to, this is scalable. It doesn't have to be, this is a 4-tick range chart. It doesn't have to be on a 4-tick range chart. You could do it on, an 8-tick range chart or a 10-tick range chart, or, whatever you want to do. All right. That's it. I don't even have my question box open. Can't see the charts. That was a while ago, I think. Or no, actually that was just a couple minutes ago. Well, you can see my charts, right? Everybody sees my charts. All right. That's it, guys. I'm going to wrap it up here. We're at 12:30, and that's it.